Hey traders, checking on the broader market. So since we last checked in, we had a big old dump day on Friday with Powell shocking the market apparently, but bears certainly all over what he had to say. The drop that we saw on the 1 hour time frame was an absolute hammer. Just RSI out the window, got down to 12, stair step drop into the futures open Sunday night as well. And we confirmed the daily downtrend. We knew the daily lower high was the most likely scenario because we would have needed a 5% bull move to head to a higher high from the size of the pullback that we saw. Couldn't say that we would just straight drop to the lower low, but obviously the news magnifying things. So we are now in a daily downtrend. So we've got daily and hourly downtrends as our guides in our major sectors, and we're watching to see can bulls form weekly higher lows. For me, I am anticipating weekly higher lows as the more likely scenario, unless we see more days like Friday. That will quickly change my tune. But because of the size of the bull move that we have seen off of the lows, because of the 50% retracement from the lows back to the all-time high, for me, the weekly higher low is the most likely scenario. Of course, we're going to be taking it one day at a time, but that's what I'm keeping an eye out for. We would need to see a daily trend change shaping up back to the bulls for a weekly higher low to be shaping up. And obviously that's not close to happening, as right now the bulls are just trying to get a daily bounce going, knowing that we would just be looking for a daily lower high, anything under the high of Friday. So I'm watching the futures charts overnight tonight because they're potentially 4-hour bear flags. We had a nice bounce today, a morning bounce. And then the weakness, we almost rolled over, but bulls did defend pre-market supports. So look at the support zone that the bulls defended, but end of the day, unable to see a new high. And if we look at the NASDAQ, it was very similar. So NASDAQ had the pre-market base of support that ended up holding, but all these tops, high of the day, and then we had the bull break with no follow through, and then a double top, and then we failed again at the end of the day. So a very clear resistance zone and a very clear support zone from both pre-market and regular trading hours today. And here we are in the middle of it. So right now, these are 4-hour bear flags. The only way that these are not going to be 4-hour bear flags are if the bulls prove to us that they are not, by following through and breaking the high of today. Obviously, the bears would love to see the lows of last night break to confirm the 4-hour bear flags and follow through from the drop. So most names, most major sectors are still seeing weakness. Got to take this phone call. Be right back. All right. So 4-hour bear flags are in play. Bulls must break the highs of today, tomorrow, without losing support overnight if we're going to negate them. I'm paying a lot of attention to the dollar, and we're going to skip to that now because the dollar today was showing me inverse action with the broader market. And generally speaking, that's normal, but it was tick for tick on the 5-minute time frame. And I have not seen that in a while. And it eventually broke away the second half of the day from being as inversely correlated. But just looking at the 15-minute time frame here, this is when the NASDAQ hit the high of the day, or this is when the NASDAQ had a bull move, I should say. And then we hit the new high of the day with a lack of follow through. And then we hit the low of the day as the dollar was hitting the high here. And it was, again, very inversely correlated. And so what we have on the dollar is a bull break of a double top. And we were watching this cup and handle like pattern, but zero follow through. So again, if you're a broader market bull, crypto bull, gold metal bull, whatever, you want to see dollar weakness. So you're not liking the break, but you're saying, okay, well, maybe if we get the break with no follow through, maybe it can be a rising wedge kind of setup. So I'm just keeping an eye on this 4-hour right now. And essentially it's the exact opposite of what I just said. If this is a 4-hour higher low that sees continuation, the broader market is very likely to drop to fresh lows and the dollar bulls will confirm their continuation. And if we were to fail, I need to see the break of 107.58 here. But essentially, looking for weekly higher lows in some cryptocurrencies and in SPY and IWM and all these places have to see the dollar weaken to have any confidence for me that a weekly higher low is shaping up in those places. So I am keeping a close eye on the dollar as to whether or not this is just a bull break that was overextended and needed to establish a new support level before continuation, or a bull break that ends up being a fake out, showing us that the bulls are exhausted and taking out the daily support level. So over the next 2 days, that's going to be very key for me. Semiconductors are weak, closing at the low of the day 2 days in a row. And if we go down our list, I did this on the live stream here, but QQQ divided by SPY shows us that QQQ is weaker than SPY, daily downtrend. That's what bears want to see. SMH divided by QQQ shows us that semiconductors are weaker than QQQ, which is weaker than SPY. NVDA divided by SMH shows us NVDA is weaker than the sector, which is weaker than QQQ, which is weaker than SPY. So it's the weaker of the weaker of the weaker. And watch these correlations because semiconductors are a lead bear play. Right now, the market is showing us very clear lead bulls and lead bear sectors. We talked about a bunch of the lead bull sectors last week: uranium, cannabis standing out, energy standing out. But those are small sectors comparative to QQQ, XLV, XLF, IWM. And so when we were in a bull market up at all-time highs in SPY, our major sectors were leading the way up, but there was weakness in other places. There was weakness in the small sectors. There was weakness in growth and things like that. So now we have the opposite. We have weakness in our major sectors, but there is strength in the smaller little niche sectors. And so for me personally, if I'm looking for the market to bounce, if I'm looking for an hourly high or low on SPY, I'm looking to take advantage of that through relatively stronger names. And if I'm just looking for an hourly lower high on SPY, or we've got a double top on SPY, then I'm looking to go bearish in tech or semiconductors where there is more weakness. And that's always shifting between the sectors that are showing us strength and weakness, but that's how I separate my brain in terms of which names am I looking at. You know, I'm not looking at NVDA bullish and bearish. I'm only looking for it bearish as long as it has this correlation. So I'm looking in one place if I'm looking for a bull trade, and I'm looking in another place if I'm looking for a bear trade. So just today as an example, I'll go over to that in a little bit. But yeah, we'll get to that in a second. So semiconductors are weak. Daily downtrend confirmed, hourly downtrend continuation. Lower high is now 221.58. Bear break of 218.35. Well, double bottom at the end of the day, but again, we closed right there. And then next level we're looking at after 218.32 is pretty much the low of every single day on the way up. So semiconductors are weaker. Still a possible inverse head and shoulders on the weekly, but again, I need to see the dollar weakness. I need to see the S&P 500 and the NASDAQ shaping up a weekly high or low if this is going to be on the table. And the more we pull back, the more difficult it's going to be for the bulls to confirm that trend change. Tesla, bulls are pleased with today. We did break bear from this tightening range, but we have not broken the second level. A bear really wants to break 279.35 to be comfortable with that bear break. On any equilibrium, you got to take out multiple levels. Breaking one level is a nice start to a signal, but to ensure follow through, you've got to take out the next levels after that. And just as an example, CCJ, uranium on the weekly, a year-long weekly equilibrium, we took out the first level of resistance, and now very quickly we have taken out the next level of resistance, making it a much more convincing break. If you take out one level and then start consolidating, you have to be worried about a fake out. So Tesla, all about 279.35 in the short term, and if that breaks, bears will be regaining some of their control and will be shaping up the possibility of a monthly lower high. We are in a monthly downtrend, and the monthly candle is about to close, and we're near the low of that candle. So a monthly lower high may be shaping up on Tesla, especially if 279 breaks. Healthcare, a lead bear. Look at the size of that daily candle. Bear flag confirming. And at this point, XLV, if we confirm a monthly downtrend and break 118.25, that's another chart where you could say this has not happened since 2018. Nope, 2008. So that would be very notable and weakening significantly. I was looking for it to be a laggard bull sector once we cleared this resistance. And that failed. So stopped out, fortunately, and was wrong. And when we're wrong, we want to stop out, because if I was still holding that bag, I would be in a lot of pain right now. So recognizing that if we break resistance and then lose the daily uptrend right after that, that's a red flag, because that's not how a breakout behaves. So tons of space for a daily lower high next bounce in healthcare. Financial sector, daily downtrend confirmed. Again, a lot of space for a weekly high or low here. Anything above 30.37, we still got 10% of space to work with, having already pulled back over 6%. But the daily downtrend is our guide, and we're not going to be shaping up a weekly high or low as long as the daily downtrend is strong. And support, again, just looking back at the previous levels here, 33.28, then 33.24, 33.02, 32.42, you get the idea. So again, those are all of our major sectors confirming the daily downtrend on Friday. IWM as well. It has more space than many sectors for the weekly high or low here. Again, we look at the retracement size. Bears want to see 50% plus retracement. We're still at 382 right now. S&P 500 is already at over 50%. Let's see where we stand exactly. S&P 500, I take that back. We haven't gotten to 50 yet. We're about 45, 46% retracement at the low of today. And again, if I'm a bear, if we break under 50% retracement, that then increases probabilities that a weekly lower high is the result of the next bounce. And we then look for an equilibrium. So IWM is definitely a bit stronger, but it's doing the same thing as far as a daily and an hourly downtrend right now. We just had a bigger bounce before we topped out. Biotech sector, also in the daily downtrend. We're watching for the possibility that as our energy names for monthly higher lows, and oil as well as a laggard is trying to pull that off and is on the verge of doing so, we're watching for our growth names to set monthly lower highs. And XBI 97.19, 95.18, little double top of resistance there. And again, we are weak. We weakened today into the end of the day. This drop on the 15-minute time frame was much more notable than QQQ. So XBI, let's see how we stand. XBI divided by SPY. If I'm a bear, I want to see the downtrend continue. Again, we're just treating it like trends. I want to see that bear break to show me we are seeing the weakest we've been compared to the S&P 500 in over a month. But same as other sectors, the hourly and the daily downtrend are our guide for XBI. So uranium, CCJ, big follow through. I posted on Twitter the pre-market rundown as to the reasons I was watching uranium very closely this week and into September. And this is pretty much best case scenario to break the weekly equilibrium, to be extended when you break it. You know, the hourly, the 4 hour, very extended as of Thursday. How it consolidated on Friday with the volume behind it in a bull flag and then just exploding to the upside today. Uranium is definitely a spot to be watching here for relative strength. And we're trying to head back to decade highs of 32.49. And we've got a strong hourly and a daily uptrend and a weekly uptrend now as our guide. So again, a much different look in this sector last week into today versus the vast majority of sectors. And another name would be UUUU. The ETF is URA. And you'll see the buzz if you're on social media. It's growing. Cannabis, CGC. So daily high or low trying to form, anything above 328. We do have a little double top at 430 and 426, but it is still a daily uptrend. The question is, can the bulls keep the daily uptrend? Essentially, the bulls are just wanting to hang around and keep consolidation healthy, and then when the broader market gets a bounce going, the bulls can take advantage of that to try and head to higher highs. We've certainly seen plenty of days where CGC goes 6 to 10%, and so that resistance is currently, we got fairly close today, but still 5 to 10% away. But still keeping an eye on it. And there's plenty of great trading opportunity in both directions still. 15-minute high or low. That was a trade I took today. So as consolidation started today, for names that started this strong, I know I'm scouting 15-minute higher lows. And so I'm watching the stronger names for those setups. So CGC, I'm scouting a 15-minute higher low. Needs help from the broader market. I'm watching for it OXY, CCJ, the relative bulls. So I entered CGC at 397, sold half at 404, and then stopped out at the end of the day when we didn't get a new high. OXY was another one I entered for the 15-minute higher low. Had a real nice equilibrium. It broke bull. We did not see a new high of the day. So then stopped out the second half of that into that weakness. But again, just recognizing where the 15-minute higher lows are most likely and where lower highs might be most likely. So the biotech sector had a double top at its high of the day. And that was one that I'm kicking myself for missing, but I did short QQQ as a top fish to protect my 15-minute higher lows. So again, I'm in CGC and OXY 15-minute higher lows, and I'm saying to myself, and I got a little poke from a TheChartGuys member, hey, are you looking to short this top fish? And like, oh yeah, that would be a good idea, huh? So shorted, grabbed some SQQQ, where my mindset is, okay, well, if we break to a higher high, I stop out with a small loss, and my long positions that I've opened already will benefit, most likely. And if we don't break resistance and we reject, my long positions are going to be negatively impacted, most likely, but the bearish position will benefit. So almost like a little insurance against positions that I already had open. So we're watching uranium, we're watching cannabis, MSOS, US cannabis, standing out stronger than Canadian for the first time in a long time. The volume's picking up. We have the first weekly uptrend since all-time highs. Watching for fall voting season, which is still a couple months away, to potentially have some impact here, but just a notable shift taking place here. And watching to see how long can bulls maintain the hourly uptrend. When we lose the hourly uptrend, we'll watch for a daily higher low with a lot of space for it to form. But again, just relative strength. Any name that broke the high of last week after what we saw Friday in the broader market as a whole, obviously standing out in a big way. BBBY, another high risk, high reward name, but a daily trend change confirmed to the bulls, weekly higher low set. So there's these little pockets where there's bulls, but overall it's bears. And again, it's the exact opposite. When we were at the all-time highs, there were pockets of bears and overall was bulls. So the dollar, we already know what we're looking for there. Gold trying to bounce, daily downtrend confirmed. Gold is another name like the S&P 500, like some crypto names, like IWM. We're looking for a weekly higher low. We're in a weekly downtrend for months, 5 months. If we don't change the weekly trend, nothing changes and the bears keep complete control. We must hold 1681 and break 17, make that 1808. If we don't do that, bears are comfortable. So to set a weekly higher low, we need a daily trend change back to bulls. To shape up a daily trend change back to bulls, we need a 4-hour uptrend. Nice bounce today, but we must confirm the 4-hour uptrend to try and start shifting momentum for a weekly higher low. But again, I won't have confidence that the metals are setting weekly higher lows unless the dollar loses that 107, what was it, 107.58? Unless it loses that support and heads back into weekly consolidation. Silver is a bit weaker than gold, but very similar setup. So it's the inverse. Metal bulls are hoping that the bear break that lacks follow through, just like they're hoping that the dollar bull break lacks follow through. Miners are weaker, on the verge of confirming the weekly bear flag. We could see the entire weekly bounce that the miners were weaker than the metals in terms of the size of that bounce, the retracement. So we're testing those lows, 24.38 in play this week. Oil bulls, nice continuation of the uptrend. So the falling wedge broke bull, and now we're following through. Did we back test that? It's always nice when things align with, nah, we didn't back test. Almost. But daily higher low is now set. That gives us a new benchmark level. So 91.08 for the bulls. Nice higher high. 99.75, we'll just call it 100. 100 psychological resistance. Next major level. And again, the bulls are shaping up the monthly higher low attempt as the energy sector has already done. Which was another reason why we were looking for that falling wedge to break bull in oil. Nice daily uptrend in the energy sector. Again, we broke the high of last week. So clearly standing out stronger. OXY. Daily bull flag confirmed. Upper wick we got to be aware of. CVX. Upper wicks. Bull's getting a little tired, it looks like. Got to keep an eye on that, but overall much stronger than most sectors. Natural gas, 12-hour head and shoulders is trying to confirm. We broke one level, but we didn't break the second level. The level we broke was 907.07, the right neckline. We did not break the left neckline of 892. So if bears are going to gain conviction, we are still holding the daily EMA 12. If I'm a bear, I'm not comfortable unless 892 breaks. So we had a big old hourly bounce, but unable to confirm the hourly trend. So I've got to see this fade all the way back down. Because if bulls keep maintaining daily EMA 12, they're going to be just fine. All right. Hope you had a good day. We'll keep an eye on these smaller sectors, gaining some attention. And bigger picture, the bears are still comfy. We'll see about these 4-hour bear flags into tomorrow. Thanks for watching. Do good things.
This was in the corner. The morning dew is showing why I let all these previously manicured bushes get nice and overgrown. Just a whole network of webs. And we don't really have many mosquitoes, even with all the ponds and water around.